Welcome back to another week of Stocks in Review for the upcoming week. In this special 6-part edition, we take a look at some of the most unbelievable things that have happened with a variety of stocks, investors, and the market itself. Things you probably wouldn't believe if you didn't see it with your own eyes. Let's take a quick look at some of the major news stories that can affect your investments. As we wrap up Thanksgiving weekend, investors definitely have a lot to be thankful for so far this year. The economy is growing, the stock market is at record highs. Historically speaking, the week that follows Thanksgiving is usually very strong, so hopefully you were able to pick up some cheap shares of your favorite stocks this short trading day. Retiring Fed Chair Janet Yellen recently stated that the Fed is close to meeting its goals and is aware of the risks as they continue to raise interest rates, but gradually. The market likes a transparent Federal Reserve and, of course, very gradual rate hikes. Expect a couple of weeks of volatility in the oil markets as OPEC meets next week. They'll be talking with Russia and other oil producers about extending their agreements to limit production. U.S. crude oil production rates come in at number 3 in the world behind Saudi Arabia and Russia, and they continue to put pressure on participating members of the cartel. 2018 should be interesting, to say the least. In cryptocurrency news, it's an understatement to say that Ethereum came back to life. It hit a high of $468.79 Friday afternoon, rising more than 39% from its $331 low last Saturday. Bitcoin hit a high of $8,348.86. This represents a 9% jump from its Saturday close of $7,672.63. So why the huge jump with Ethereum? A lot of analysts attribute the jump to recent bullishness expressed by Mike Novogratz, a billionaire former Wall Street hedge fund manager who spoke on Bloomberg TV this week. For what it's worth, he expects Ethereum to hit $500 by the end of the year and Bitcoin to reach $10,000 by the end of next month. Hopefully you had a chance to check out some of the suggestions that I made last time, including ticker symbol NAK. It closed November 9th at $2.14 a share and hit a high of $2.29. 22nd Century Group jumped 17% from $2.08 a share to a high of $2.42. Synchronous Technologies was at $10.73 a share and hit a high of $11.25 on November 22nd, an increase of nearly 5%. My favorite ETF, SPXL, went from $41.34 up to $42.16, an increase of 2%. On watch for the next 2 weeks, I have Northern Dynasty Minerals, Protalix Bio, Flexion Therapeutics, Synchronous Technologies, and Exelixis Incorporated. At Northern Dynasty, the accumulation continues. Investors are waiting for the anticipated pop once partnership news is announced. At the recent mining conference, the CEO was very optimistic, and you could just tell that he wanted to provide the audience with more information, but for obvious reasons cannot. The charts at PLX are looking up. Volume levels have increased, and Phase 2 results on the OPRX 106 are being discussed at a conference at the Czech Republic. At Flexion, it looks like we finally broke resistance and an uptrend has started. Insider buying has a lot to do with this. Next week should be very telling. At Synchronous Technologies, we're just waiting on the financials to be reported. The charts have definitely turned around, and the jump will be significant once the company is in compliance. I like the higher highs and the higher lows that we're seeing as well. At Excel, I finally see a nice bullish setup in the charts. This company, although many say it's priced at the high end, has robust demand for its products and terrific commercial relationships with a number of big pharma names. I also like their collaborative arrangements for clinical work. I think you'll see the late week uptrend this week will continue once everyone's back to work on Monday. This week's special topic is how to get rich with Bitcoin and cryptocurrencies in general. I've researched all the top names in the field, and anyone who got rich from it either got in early or came up with an allied industry that facilitates using cryptocurrencies. It turns out that mining today will barely make a difference in your bottom line once you pay for higher utility bills and, of course, computers with high quality and high speed processing chips. So what's an average person supposed to do? I think the easiest thing to do is to start buying some of the alternative currencies that forked off one of Bitcoin's numerous blockchain forks. For example, Bitcoin Cash recently hit a high of $16.23 a coin, a mere 20% of Bitcoin's current value. Recent good news from South Korean regulators say that they have no plans to regulate cryptocurrencies. BCH started trading at just $3.99 a coin on August 2nd. It's more than quadrupled in less than 4 months. If you do just a little bit of research with Bitcoin Cash, you'll see the potential is just unbelievable. It could easily double in a month. There's also Bitcoin Gold, which is currently in a bullish trend and broke the $250 resistance level against the USD and its own $280 level of resistance, a trend that you want to see whether you're investing in stocks or cryptocurrencies. Bitcoin Gold was announced at the end of July and started trading on October 23rd. It was designed to resolve capacity issues associated with Bitcoin. In addition, with Bitcoin Gold, there's increased centralization of the mining industry that secures and verifies Bitcoin transactions. Another big difference with Bitcoin Gold is that it uses Equihash, which focuses more on memory than computing power to solve intensive algorithms necessary when mining. The goal with this is to make Bitcoin Gold more accessible to ordinary users who want to mine cryptocurrencies on their own personal computer. Since the end of October, after a few days of significant volatility, Bitcoin Gold went from $137 a coin to a high of $509 on November 11th. Today it stands at $384 a coin. This morning, Bitcoin Diamond was born and it launched from block 495866. It's supposed to provide faster transaction confirmations and much more in terms of privacy protection. I suggest that you watch it for a few days. Then, once it stabilizes, possibly consider an investment with your speculative cash funds. Ethereum, which is still affordable in the mid $400 range, is another relatively safe alternative for those of you who want quicker gains but much more risk than the stock market. Ethereum isn't just a digital currency, it's a blockchain-based platform that uses smart contracts and uses its currency called Ether for peer-to-peer contracts. So here's the long and short of it. Whether you invest in Ethereum, Bitcoin Cash, Gold, or Diamond, do so early on, because once they become mainstream like the original vanilla Bitcoin, it's a bit too late to get the highest percentage of gains. Thanks for watching, and please don't forget that investing in the stock market or in cryptocurrencies carries risk. Never invest more than you can afford to lose or not have access to for an extended period of time. If you like our videos, please click subscribe, tell your friends, and hit that like button too. We'll see you back in 2 weeks.